Test 7, Finance 7.1 What is a lien theory state? A state in which a mortgagee holds legal title to a secured property. B. A state in which a mortgagee has equitable title to a secured property. C. A state that allows a real estate owner's creditors to record liens against the owner's property. D. A state in which a lien is considered as a conveyance. 7.2 What is the function of a note in a mortgage or trust deed financing arrangement? A. It is the lender's security instrument in the collateral property. B. It is evidence of ownership of the mortgage or trust deed. C. It contains the borrower's promise to maintain the value of the property given as collateral for a loan. D. It is evidence of the borrower's debt to the lender. 7.3 When homebuyer Henry pledges his newly purchased home as collateral for a mortgage loan, the evidence of the pledge is the A. Trust deed or mortgage. B. Promissory note. C. Loan commitment. D. Loan receipt. 7.4 The borrower in a mortgage loan transaction is known as the A. Mortgagee. B. Mortgager. C. Liener. D. Trustee. 7.5 If a borrower obtains an interest-only loan of $200,000 at an annual interest rate of 6%, what is the monthly interest payment? A. $1,200. B. $600. C. $500. D. $1,000. 7.6 If a borrower's monthly interest payment on an interest-only loan at an annual interest rate of 6% is $500, how much was the loan amount? A. $72,000. B. $100,000. C. $120,000. D. $50,000. 7.7 A borrower of a $50,000 interest-only loan makes annual interest payments of $3,750. What interest rate is the borrower paying? A. 7.5%. B. 0.75%. C. 3.75%. D. 8.5%. 7.8 Maria borrows $100,000 and pays 2 points for the loan. How much does she pay in points? A. $200. B. $2,000. C. $1,200. D. It depends on the interest rate. 7.9 Which of the following is true of an amortizing loan? A. The amount of annual interest paid is the same for every year of the loan term. B. Part of each periodic payment is applied to repayment of the loan balance in advance and part is applied to payment of interest in arrears. C. Except for any points that may be paid, the interest on the loan balance is usually paid in advance. D. The interest rate is reduced each year to maintain equal payments even though the outstanding loan balance is smaller. 7.10 For a loan that is not backed by the Federal Housing Administration or Veterans Administration, and for which the borrower is making a down payment of less than 20%, the lender is likely to require the borrower to obtain a subrogation agreement. B. Private mortgage insurance. C. A letter of credit. D. A cosigner on the note. 7.11 What is a loan-to-value ratio? A. The percentage of a lender's portfolio that is composed of mortgage loans. B. The ratio of borrowed principal plus total interest to the appraised value of the collateral property. C. The ratio of a lender's return on a mortgage loan to the value of the collateral property. D. The fraction of the appraised value of the property offered as collateral which the lender is willing to lend. 7.12 The difference between what a borrower has to pay to purchase a property and the amount a lender will lend on the property is the A. Mortgage insurance coverage amount. B. Lender's profit margin. C. Buyer's down payment. D. Origination fee. 7.13 The Equal Credit Opportunity Act prohibits a lender from A. Refusing a loan because the borrower does not match the lender's target market. B. Including income from self-employment in the borrower's qualifying income. C. Requiring both spouses to sign the loan application form. D. Refusing a loan because a borrower has a defective credit report. 7.14 A loan applicant has an annual gross income of $72,000. How much will a lender allow the applicant to pay for monthly housing expense to qualify for a loan if the lender uses an income ratio of 28%? A. $2,160. B. $1,680. C. $1,068. D. $840. 7.15 AMC Bank discovers, in considering buyer Bob's application for a mortgage loan, that Bob has borrowed the down payment from an uncle and has to repay that loan. Bob should expect that AMC Bank will A. Refuse the application. B. Adjust the applicant's debt ratio calculation and lower the loan amount. C. Increase the loan amount to enable the borrower to pay off the loan to the relative. D. Require the borrower to make payments to an escrow account for repayment of the relative's loan. 7.16 The Federal Reserve's Regulation Z applies to which loans? A. All loans. B. All loans secured by real estate. C. All loans secured by a residence. D. All loans over $25,000. 7.17 If a particular loan falls under Regulation Z's right of rescission provision, A. The lender has the right to change the terms of the loan within a certain period. B. The lender has the right to accelerate repayment of the loan because of a change in the borrower's credit status. C. The borrower has the right to pay off the loan ahead of schedule with no penalty. D. The borrower has a limited right to cancel the transaction within a certain period. 7.18 Under the Equal Credit Opportunity Act, a lender, or a real estate agent who assists a seller in qualifying a potential buyer, may not A. Tell a rejected loan applicant the reasons for the rejection. B. Ask the buyer/borrower about his/her religion or national origin. C. Ask the buyer/borrower to explain unconventional sources of income. D. Use a credit report that has not been provided to the borrower. 7.19 A conventional mortgage loan is one that is A. Backed by the Federal National Mortgage Association. B. Insured under Section 203, B, of the Federal Housing Administration Loan Program. C. Guaranteed by the Government National Mortgage Association. D. Not FHA insured or VA guaranteed. 7.20 The assumability of an FHA insured loan is A. Unrestricted. B. Limited by when the loan was originated. C. Limited to owner-occupied properties. D. Prohibited on all existing loans under current regulations. 7.21 A VA Certificate of Eligibility determines A. How long an individual served in the military. B. The maximum loan amount an approved lender can give to veterans. C. How much of a loan the VA will guarantee. D. Whether a lender is approved to issue VA guaranteed loans. 7.22 A borrower obtains a 30-year, fully amortizing mortgage loan of $50,000 at 8%. What is the principal balance at the end of the loan term? A. $2,000. B. $50,000. C. $220. D. 0. 7.23 Which of the following describes a purchase money mortgage financing arrangement? A. A bank gives a buyer a senior mortgage loan that fully covers the cost of purchasing the property. B. The buyer gives the seller a mortgage and note as part of the purchase price of the property. C. A land trust holds title to the property while the buyer makes periodic installment payments to the seller. D. The seller uses the purchase money obtained from the buyer's mortgage loan to repay the seller's outstanding loan balance. 7.24 A homeowner borrows money from a lender and gives the lender a mortgage on the property as collateral for the loan. The homeowner retains title to the property. This is an example of A. Intermediation. B. Forfeiture. C. Hypothecation. D. Subordination. 7.25 Which of the following correctly describes the flow of money and documents in a mortgage loan transaction? A. The borrower gives the lender a note and a mortgage in exchange for loan funds. B. The lender gives the borrower a mortgage and receives a note in exchange for loan funds. C. The borrower receives a note in exchange for a mortgage from the lender. D. The lender gives the borrower a note, loan funds, and a mortgage. 7.26 In a deed of trust transaction, which of the following occurs? A. The beneficiary conveys title to a trustee in exchange for loan funds. B. The trustee conveys title to a beneficiary in exchange for loan funds. C. The trustor conveys title to a trustee in exchange for loan funds from the beneficiary. D. The trustee conveys title to a trustor in exchange for loan funds from the beneficiary. 7.27 A lender lends money to a homeowner and takes legal title to the property as collateral during the payoff period. They are in A. Title theory state. B. Lien theory state. C. State allowing land trusts. D. State where hypothecation is illegal. 7.28 A lender who charges a rate of interest in excess of legal limits is guilty of A. Redlining. B. Usury. C. Profit-taking. D. Nothing, there are no legal limits to interest rates. 7.29 A lender is charging 2 points on a $60,000 loan. The borrower must therefore pay the lender an advance amount of A. $120. B. $300. C. $1,200. D. $3,000. 7.30 The difference between a balloon loan and an amortized loan is A. An amortized loan is paid off over the loan period. B. A balloon loan always has a shorter loan term. C. An amortized loan requires interest payments. D. A balloon loan must be retired in 5 years. 7.31 A distinctive feature of a promissory note is that a. It is not assignable. B. It must be accompanied by a mortgage. C. It is a negotiable instrument. D. It may not be prepaid. 7.32 When the terms of the mortgage loan are satisfied, the mortgagee A. may retain any overage in the escrow account. B. may inspect the property before returning legal title. C. may be entitled to charge the borrower a small fee to close the loan. D. may be required to execute a release of mortgage document. 7.33 In addition to income, credit, and employment data, a mortgage lender requires additional documentation, usually including a. an appraisal report. B. a criminal record report. C. a subordination agreement. D. a default recourse waiver. 7.34 The three overriding considerations of a lender's mortgage loan decision are a. points, interest rate, and loan term. B. the location of the mortgaged property, the borrower's cash, and the amount of the borrower's equity. C. the ability to repay, the value of the collateral, and the profitability of the loan. D. the amount of the loan, the borrower's income, and the down payment. 7.35 The reason lenders consider the loan-to-value ratio important in underwriting is that a. they don't want to lend borrowers any more money than necessary. B. they want to ensure there is more than enough collateral to cover the loan amount. C. borrowers can only afford to borrow a portion of the entire purchase price. D. the higher the loan-to-value ratio, the more profitable the loan. 7.36 The Equal Credit Opportunity Act, ECOA, requires lenders to a. extend equal credit to all prospective borrowers. B. consider the income of a spouse in evaluating a family's creditworthiness. C. discount the income of a person involved in child rearing or childbearing. D. specialize lending activity by geographical area for improved customer service. 7.37 Lenders use an income ratio in qualifying to a. ensure a borrower has the earning power to make the loan payments. B. compare a borrower's earnings to the borrower's short-term debt. C. identify the highest possible interest rate that the borrower can afford. D. quantify the borrower's assets to the fullest extent. 7.38 The debt ratio formula used to qualify borrowers is a. total debt divided by debt payments. B. gross income divided by assets. C. gross income divided by debts. D. debt payments divided by gross income. 7.39 At the closing of a mortgage loan a. the borrower pays off the note and receives clear title. B. the lender issues a firm loan commitment. C. the parties complete all loan origination documents and the loan is funded. D. the borrower's loan application is complete and the file closed. 7.40 Which laws or regulations require mortgage lenders to disclose financing costs and annual percentage rate to a borrower before funding a loan? A. the Equal Credit Opportunity Act. B. Truth in lending laws and regulations. C. The Real Estate Settlement and Procedures Act. D. Federal Fair Housing Laws. 7.41 Which laws or regulations prevent mortgage lenders from discriminating in extending credit to potential borrowers? A. The Equal Credit Opportunity Act. B. Truth in lending laws. C. The Real Estate Settlement and Procedures Act. D. Federal Fair Housing Laws. 7.42 Which laws or regulations require mortgage lenders to provide an estimate of closing costs to a borrower and forbid them to pay kickbacks for referrals? A. The Equal Credit Opportunity Act. B. Truth in lending laws. C. The Real Estate Settlement and Procedures Act. D. Federal Fair Housing Laws. 7.43 Which of the following are methods used by the Federal Reserve System to regulate the money supply? A. Selling securities, printing money, and controlling lending underwriting requirements. B. Buying securities, changing the discount rate, and controlling banking reserves. C. Printing money, changing interest rates, and selling T-bills. D. Controlling the prime rate, trading securities, and purchasing loans. 7.44 How does the secondary mortgage market aid borrowers seeking a mortgage loan? A. It cycles funds back to primary lenders so they can make more loans. B. It issues second mortgages and sells them in the home equity market. C. It lends funds to banks so they can make more loans. D. It pays off defaulted loans made by primary mortgage lenders. 7.45 The major organizations operating in the secondary mortgage market are A. Fannie Mae, Freddie Mac, and Ginnie Mae. B. Fannie Mae, GMAC, and MGIC. C. Freddie Mac, FHA, and VA. D. Fannie Mae, Freddie Mac, and the Federal Reserve. 7.46 What is the role of Fannie Mae in the secondary mortgage market? A. It guarantees FHA-backed and VA-backed loans. B. It insures FHA-backed and VA-backed loans. C. It purchases FHA-backed and VA-backed loans. D. It originates FHA-backed and VA-backed loans. 7.47 What is the role of the Federal Housing Authority in the mortgage lending market? A. It guarantees loans made by approved lenders. B. It insures loans made by approved lenders. C. It purchases loans made by approved lenders. D. It originates loans made by approved lenders. 7.48 What is the role of the Veterans Administration in the mortgage lending market? A. It guarantees loans made by approved lenders. B. It insures loans made by approved lenders. C. It purchases loans made by approved lenders. D. It originates loans made by approved lenders. 7.49 In a graduated payment mortgage loan, A. Loan funds are disbursed to the borrower on a graduated basis. B. The interest rate periodically increases in graduated phases. C. The loan payments gradually increase. D. The loan payments gradually increase and the loan term gradually decreases. 7.50 In a buy-down, A. The lender lowers the interest rate on a loan in exchange for a prepayment of principal. B. The borrower pays additional interest at the onset in order to obtain a lower interest rate. C. The lender requires the borrower to buy down the price of the property by increasing the down payment. D. The borrower pays the lender additional funds to buy down the term of the loan. Test 8, Investments, Taxation, Ethics 8.1 When an investor has to pay a lender more to finance the investment than the investment property generates in income, the investor suffers from a negative amortization, b. negative leverage, c. a reverse mortgage, d. a debt investment. 8.2 Cost recovery is allowed as a federal tax deduction on a principal residences that do not have a home office, b. income properties, c. land, d. commercial properties owned by the federal government. 8.3 A homeowner paid $200,000 for a house 3 years ago. The house sells today for $239,000. How much has the property appreciated? A. 8.4%, B. 6.5%, C. 19.5%, D. 16.3%. 8.4 The primary tax benefit in owning a non-income property such as a residence is a depreciation of improvements, b. appreciation of land, c. a deduction for costs of operating the property, d. a deduction for mortgage interest. 8.5 A house sold for $250,000. The seller paid a brokerage commission of 6%, legal fees of $600, and had other closing costs of $1,500. What are net proceeds from the sale? A. $235,000, B. $234,000, C. $233,500, D. $232,900. 8.6 A homeowner bought a house 5 years ago for $150,000. Since then, the homeowner has spent $3,000 to pave the driveway and has added a central heating/air conditioning system at a cost of $4,000. What is the homeowner's adjusted basis if the house is sold today? A. $156,000, B. $157,000, C. $144,000, D. $145,000. 8.7 A homeowner sold her house and realized a net proceeds amount of $210,000. Her adjusted basis in the home was $176,000. She immediately bought another house for $200,000. What was her capital gain? A. $10,000, B. $24,000, C. $34,000, D. none. 8.8 After 5 years of owner occupancy, Simon Wilson sells his principal residence for a gain of $150,000, and the next month buys another principal residence that costs more than the adjusted sale price of the old home. Which of the following is true of the treatment of the tax on gain? A. There is no taxable gain. B. It must be paid in the year of the sale. C. The homeowner may choose to pay it or defer it. D. Tax is due on the difference between the cost of the new home and adjusted basis of the old one. 8.9 Ralph Roberts buys a small office building as an investment and participates actively in the management and operation of the building. This is an example of a syndication. B. Equity investment. C. Direct investment. D. Illiquidity. 8.10 Elmo Gilmore owns a small retail property that he inherited from his father. There are no mortgages or interest expenses connected with the property. Elmo takes an annual cost recovery expense of $5,000. The property has a monthly gross income of $1,500 and monthly operating expenses of $500. Elmo's taxable income from this property will be taxed at a rate of 30%. What is the tax liability for the year? A. $2,100. B. $3,600. C. $3,900. D. $7,000. 8.11 All investors desire their investments to increase in value. However, a. the degree of return is inversely related to the degree of risk. B. the more the investor stands to gain, the greater the risk that the investor may lose. C. investments requiring intense management have lesser returns. D. the more liquid an investment is, the greater the chances are that the investment will not appreciate. 8.122 Of the financial rewards that investments offer are a. income and tax benefits. B. negative leverage and appreciation. C. appreciation and taxation. D. positive leverage and prestige. 8.13 Because a real estate investment can take a long time to sell, real estate investments are considered to be a. management intensive. B. insensitive to marketing. C. vulnerable to sellers' markets. D. relatively illiquid. 8.14 Compared to a stock portfolio, a real estate investment would be considered a riskier investment. B. a more management-intensive investment. C. a shorter-term investment. D. a more leveraged investment. 8.156 Investors purchase a shopping center. One investor manages the tenants and another handles the marketing and leasing. Two investors manage accounting and finance, and the remaining two run the management office. This is a possible example of a general partnership. B. a limited partnership. C. a real estate investment trust. D. an investment conduit. 8.16 The formula for determining taxable income produced by an income property is a. gross income minus expenses plus land and building depreciation. B. gross income minus expenses minus land and building depreciation. C. gross income minus building depreciation plus land depreciation. D. gross income minus expenses minus building depreciation. 8.17 In deriving taxable income on an investment property, it is generally legal to a. deduct principal and interest payments from income. B. deduct principal payments from income. C. deduct interest payments from income. D. deduct principal and interest payments from income and capital gain. 8.18 Jake does not use any part of his principal residence as a home office. Which of the following is true of the tax treatment of this property? A. The owner may deduct the property's interest and principal from ordinary income. B. The owner may depreciate the property and deduct depreciation expenses from ordinary income. C. The owner can deduct any capital gain when the property is sold. D. The owner may be able to avoid capital gain tax when the property is sold. 8.19 An investment property seller pays $14,000 in closing costs. These costs A. may be deducted from personal income. B. may be deducted from the property's income. C. may be deducted from the sale price for gains tax purposes. D. may be deducted from the adjusted basis for gains tax purposes. 8.20 The formula for calculating capital gain tax is the taxpayer's tax bracket multiplied by A. the sum of the beginning basis plus gain. B. the difference between amount realized and adjusted basis. C. the sum of net sale proceeds and capital gain. D. the difference between net sale proceeds and capital gain. 8.21 Which of the following entities can legally levy annual real property taxes? A. The Internal Revenue Service. B. A utility company. C. A tax district. D. A court of law. 8.22 Certain classes of property owner and types of property are exempted or immune from real property taxation in many areas. The protected categories usually include A. recreational properties. B. properties owned by a government agency. C. properties that comply with the Americans with Disabilities Act. D. properties occupied by single-parent families. 8.23 What is the purpose of an equalization factor in ad valorem taxation? A. It modifies a local tax rate to bring it into conformity with statutory tax rates. B. It changes the assessed value of an individual property to make it reflect the assessed values of other properties in the same neighborhood. C. It adjusts assessments in a locality to make them more consistent with an average level for the state or other higher level jurisdiction. D. It adjusts the amount of the homestead exemption in a certain area to make it proportionally equivalent to the average homestead exemption in other areas. 8.24 A school district's tax rate is 10 mils. The school district's required revenue from real estate taxes is $20 million. What is the tax base of the area? A. $20 million. B. $200 million. C. $2 billion. D. $200 billion. 8.25 A homeowner receives a tax bill that includes an amount for the library district, taxed at $1 per $1,000, and the fire protection district, taxed at $2 per $1,000. How much does the taxpayer have to pay for these two items if the property's taxable value is $147,000? A. $1,567. B. $157. C. $1,410. D. $441. 8.26 A town is replacing a sidewalk that serves 5 homes. The length of the sidewalk is 200 feet. Mary's property has 38 feet of front footage. If the cost of the project to be paid by a special assessment is $30,000, what will Mary's assessment be? A. $6,000. B. $5,700. C. $789. D. $1,579. 8.27 What is a tax deed? A conveyance instrument for a property that is sold to enforce a tax lien. B. A document recorded in title records showing that property taxes have been paid. C. A notice to a homeowner that a tax lien has been entered against the property. D. A document that gives a municipal authority the power to collect an individual tax bill. 8.28 If a property owner has the right to redeem his or her property after a tax sale, the owner has a legal right of rescission. B. An equitable right to acquire title. C. A right of homestead exclusion. D. A statutory right of redemption. 8.29 The formula for deriving a municipal jurisdiction's ad valorem tax base is A. The jurisdiction's annual budget times the tax rate. B. The total of all assessed values of properties minus exemptions. C. The total amount of ad valorem taxes required by the budget. D. The municipality's budget multiplied times the millage rate. 8.30 A homeowner's total tax bill is derived by A. Dividing the tax requirement by the tax base. B. Multiplying each district's tax rate times the market value of the property. C. Multiplying each district's tax rate times the taxable value of the property. D. Averaging the tax rate for each tax district, and multiplying the average tax rate times the assessed value. 8.31 The Fair Housing Law that first protected people against discrimination in housing based on race was the A. Civil Rights Act of 1866. B. Civil Rights Act of 1968. C. Executive Order 11063 of 1962. D. Title VIII Amendment to the Fair Housing Act. 8.32 The classes protected against discrimination by the Fair Housing Act of 1968 are A. Race only. B. Religion and gender only. C. Race, color, religion, and national origin. D. Age and gender only. 8.33 An agent is committing an act of discriminatory advertising by doing which of the following? A. Telling prospective buyers about the positive and negative aspects of a certain neighborhood. B. Telling a prospective seller that now would be a good time to put a property on the market. C. Advertising a property as available to individuals of a particular race. D. Telling a prospective buyer that the agent is too busy to show the buyer properties personally on a given day. 8.34 Which of the following is an example of blockbusting? A. An agent shows a minority home buyer properties located in a neighborhood where there are no other minority homeowners. B. An agent persuades a minority home buyer to avoid looking in a neighborhood where there are no minority homeowners. C. An agent persuades a family to put their house on the market because ethnic minority families are beginning to move into the neighborhood. D. An agent persuades a minority home buyer to buy a property located in an area where most of the homeowners belong to minority groups. 8.35 The practice of redlining is specifically prohibited by A. the Home Mortgage Disclosure Act. B. The Real Estate Settlement Procedures Act. C. The Civil Rights Act of 1866. D. The Americans with Disabilities Act. 8.36 Title 8 of the Civil Rights Act of 1968 applies to the sale of a. All single-family residences. B. All privately owned single-family residences. C. Privately owned single-family residences listed with a broker. D. Privately owned single-family residences for sale by owner. 8.37 A broker signs a listing agreement to sell a home for $200,000. An immigrant couple are interested in the house and ask the agent the price. The agent states the price as $210,000. According to the fair housing laws, such an action is a. Illegal, because the agent changed the terms of the sale to discourage this particular couple. B. Illegal, because the agent violated the listing agreement. C. Legal, because the quoted price increase did not exceed 10% of the listing price. D. Legal, because the increased price does not necessarily exclude the couple. 8.38 Which of the following actions is allowed under federal fair housing laws? A. A broker, following the instructions of the seller, advertises the property as for sale to Christian families only. B. A home seller, acting without a broker, places a for sale mature, single men only sign in front of the house. C. The owner of for rental houses advertises one of the properties for rent to married couples, no children, no pets. D. The owner of a duplex who resides in one of the units refuses to rent the other unit to a non-Christian. 8.39 Cecily Longstreet believes a real estate agent has kept her from seeing a certain property for rent because she is a woman. What actions should she take if she wants legal satisfaction for her complaint? A. File charges of illegal discrimination with the police department that has jurisdiction over the local area. B. File a complaint with HUD or file suit against the offending parties in a state or federal court within the prescribed time period. C. Wait 2 years and then file a civil suit in federal court. D. Sue HUD for damages under the Civil Rights Act of 1866. 8.40 George Scott hires Shannon Lang to sell his house, with the condition that he will not be the first one in the neighborhood to sell to members of a certain ethnic group. What should Shannon do about this condition? A. Inform Scott that the condition is illegal and that she cannot comply with it. B. Note the condition on the listing agreement and have Scott initial it. C. Pretend that she did not hear the condition and proceed to market the property to all groups. D. Tell Scott that she will try to discourage members of that group from looking at the property, but that she cannot control cooperating brokers. 8.41 Under federal fair housing laws, the owner of a 10-unit apartment building may legally A. Advertise that the property is not available to anyone requiring wheelchair access. B. Refuse to rent to aliens. C. Require families without children to pay the same security deposit that families with children must pay. D. Require tenants to move out when they become 62 years old. 8.42 Sam Goff wants to rent out his home, but wants to exclude families with children because of his belief that they cause damage. Under what conditions would federal fair housing laws allow Goff to rent on these terms? A. The owner has a consistent no-children policy in all his rental properties. B. The owner can prove that costs to repair damage caused by previous tenants with children exceeded the tenant's security deposit. C. It is a single-family house that is part of a federally designated planned unit development. D. It is a single-family house, and the owner owns only one other rental home in addition to his own residence. 8.43 Which of the following laws or rulings extended discrimination to include gender, handicapped status, and family status? A. Executive Order 11063. B. The Civil Rights Act of 1968. C. The Fair Housing Amendments Act of 1988. D. Jones v. Meyer. 8.44 The Wallaces, a minority family, would like to buy a home in a certain price range. Agent Ambrose shows the family all available properties in a neighborhood of families with similar backgrounds. Ambrose does not mention a number of homes in the family's price range in other neighborhoods. This agent could be liable for A. Blockbusting. B. Providing unequal services. C. Steering. D. Nothing. His services were legal and acceptable. 8.45 An agent does not like a particular minority buyer, and is very short with the person, refusing to engage in lengthy conversation or show him any properties. A second minority party visits the office the next day. The agent is very forthcoming, and shows the person 5 prospective properties. This agent could be liable for A. Providing unequal services. B. Steering. C. Misrepresentation. D. Nothing. Both parties were minorities, and therefore no discrimination occurred. 8.46 Following the client's recommendation, an agent conceals the availability of a property from an employed but pregnant and unmarried minority woman. This agent could be liable for A. Discriminatory misrepresentation by omission. B. Steering. C. Violating fiduciary duty. D. Nothing. An agent may show or not show any property at his or her discretion. Test 9, Closings, Risk Management, Property Management 9.1 The conditions of an escrow agreement cannot be met and the related transaction cannot be completed. In such a case, the escrow agent A. levies a fine against the defaulting party. B. assigns his or her fiduciary responsibilities to the seller's broker. C. returns funds to the buyer. D. cancels the sale contract and destroys the transaction documents. 9.2 To avoid violating the Real Estate Settlement Procedures Act, parties who are providing services to the buyer or seller in a transaction must A. be paid before the closing date for any service they provide. B. inform the closing agent of the cost of their services at least 1 week before the closing date. C. receive payment only from the funds held in escrow, not directly from buyer or seller. D. disclose in writing any business relationships they have with other parties involved in the transaction. 9.3 A certain item is to be prorated between a buyer and seller. If no outside party is concerned, Which of the following statements is true? A. The item must be prorated and recorded as a debit to one party and a credit to the other party for the same amount. B. The item must be prorated and recorded as a debit to one party, the remainder is recorded as a credit to the other party. C. The party who is owed money receives a credit for the entire item and a debit for the prorated amount. D. The party who owes money receives a debit for the portion owed and a credit for the portion that is not owed. 9.4 An item is said to be paid in arrears if it is normally paid A. on a monthly or yearly basis. B. At some time after the expense is incurred. C. Only after it is billed. D. Whenever it is incurred. 9.5 A seller received a rental payment of $900 in advance. At closing, the seller has earned only $320 of this rent. What should appear on the closing statement? A. A debit to the seller and credit to the buyer for $320. B. A debit to the seller for $580 and a credit to the buyer for $320. C. A debit to the seller for $320 and a credit to the buyer for $900. D. A debit to the seller and credit to the buyer for $580. 9.6 A buyer will receive a water bill for an estimated $100 at the end of the month. At closing, the seller has used an estimated $43 in water. What should appear on the closing statement? A. A debit to the seller and credit to the buyer for $57. B. A debit to the seller and credit to the buyer for $43. C. A debit to the buyer and credit to the seller for $57. D. A debit to the buyer and credit to the seller for $43. 9.7 A sale transaction closes on April 1st, the 91st day of the tax year. The day of closing belongs to the seller. Real estate taxes for the year, not yet billed, are expected to be $2,190. According to the 365-day method, what is the seller's share of the tax bill? A. $1,644. B. $546. C. $959.30. D. $1,364.66. 9.8 A sale transaction closes on July 4th. The day of closing belongs to the seller. On January 1st, the seller paid a hazard insurance premium of $375 for the calendar year. According to the 12-month/30-day method, what is the seller's share of the insurance premium? A. $183.33. B. $187.50. C. $189.05. D. $191.67. 9.9 Waldo is buying Marianne's house. The closing date, day belongs to seller, of the sale transaction is September 1st, day 244 of the year. Current year real estate taxes are $1,100, will be billed to buyer next year. Use the 365-day method for pre-rating. What is Marianne's share of the real estate taxes? A $364.66. B $367.67. C $732.33. D $735.34. 9.10 Christie is buying John's house. The closing date, day belongs to seller, of the sale transaction is September 1st, day 244 of the year. Existing hazard insurance of $350 has been paid by John through December 31st. Use the 365-day method for pre-rating. What is Christie's share of the existing hazard insurance already paid in full? A $116.03. B $117.99. C $232.01. D $233.97. 9.11 Julie is buying Florence's house. The closing date, day belongs to seller, of the sale transaction is September 1st, day 244 of the year. The buyer's loan amount is $78,750, 90%, 30 years at 8%. The monthly payment on this loan is $577.84, with $525 going to interest in the first month. At closing, Julie must prepay interest for the period of September to Sep 30. Use the 365-day method for pre-rating. What is Julie's prepaid interest amount? A $507.50. B $525. C $543.10. D $558.58. 9.12 Melissa is buying Raymond's house. Melissa's loan amount is $88,750. She has agreed to pay 2 points at closing. How much will Melissa pay for points? A $157.50. B $177.50. C $1,775. D $887.50. 9.13 Tina is buying Terrell's house for $187,500. The broker's commission, to be paid by the seller, is 6%. How much will Terrell pay the broker? A $31,250. B $2,625. C $4,725. D $11,250. 9.14 A sale contract stipulates that a buyer is to pay the seller's transfer tax expenses. This practice is not customary in the area. In this case, A. The buyer and seller must amend the contract before closing. B. The contract is voidable, since the seller must pay the expense. C. The buyer may pay or not pay the expense, at his or her option. D. The buyer must pay the expense. 9.15 What a buyer has to pay at closing is equal to A. The excess of the buyer's debits over the buyer's credits. B. The excess of the buyer's credits over the buyer's debits. C. The excess of the seller's debits over the seller's credits. D. The excess of the seller's credits over the seller's debits. 9.16 The standard E&O policy covers damages resulting from a failure to disclose an environmental condition. B. Antitrust violations. C. Mishandling of earnest money deposits. D. Negligence, error, or omission in carrying out professional services. 9.17 Which of the following is a common risk relating to the agency relationship? A. Failing to inform and disclose properly. B. Failing to take a personal interest in a transaction. C. Acting as an exclusive agent without an oral agency agreement. D. Forgetting to record the listing agreement. 9.18 Even after giving buyer and seller the required information about property condition disclosures, the licensee may still be subject to legal action for a failing to detect customer misrepresentations. B. Failing to disclose known adverse facts. C. Relying on publicly available market information. D. Advising the purchaser to exercise due diligence. 9.19 A licensee performing a comparative market analysis must be careful to a. Use the term market value whenever possible in the report. B. Show a low suggested selling price to avoid a complaint of misrepresenting the value. C. Include the results of a certified appraisal in the analysis. D. Avoid creating a false impression that the licensee is a certified appraiser. 9.20 One of the major risk areas in fulfilling a listing agreement is a. Finding a buyer who turns out to be unqualified. B. Exceeding the authority of the agreement. C. Showing the property without the presence of the owner. D. Cooperating with other licensees. 9.21 To reduce the risk of committing an error or omission in the contracting process, it is a good idea to a. Use a checklist of all items, contingencies, dates, and responsibilities that must be met. B. Delegate some of your responsibilities to the licensee who represents the other party in the contract. C. Call the buyer and seller daily to check on progress. D. Cut the list of necessary tasks down to a few essentials and concentrate on tracking those. 9.22 Regarding contracts and forms, a. Once written and signed they cannot be changed except by a lawyer. B. Real estate licensees may alter forms but not contracts. C. Whoever originates them can make changes without the risk of unauthorized practice of law. D. The principals may make changes as long as they sign or initial each change. 9.23 Fair housing laws are easily violated. An effective way for agents to minimize the risk of doing so is to a. Deal only with consumers who do not belong to a protected class. B. Obtain education in the content and intent of the laws. C. Make sure there is always a witness present at all meetings with consumers. D. Stay away from transactions involving public housing. 9.24 A licensee risks violating antitrust law by a. Being present at a conversation where the setting of commission rates is discussed. B. Being present at a discussion of antitrust laws. C. Charging a commission rate that happens to be the same as that charged by another firm. D. Cooperating with another firm to do market research. 9.25 How is an intentional misrepresentation penalized? A. License discipline, fines, and possible incarceration. B. License discipline and fines, but no incarceration. C. License discipline only. D. Fines only. 9.26 Of the following actions, the only one which avoids any risk of committing unintentional misrepresentation is A. Measuring and reporting property dimensions. B. Describing properties and amenities. C. Stating that a client should seek legal counsel. D. Making statements about the presence or absence of hazardous substances. 9.27 To reduce risks inherent in reporting transaction progress to a client, the licensee should A. Make reports orally only, never in writing. B. Leave progress reporting to the inspectors and other experts. C. Advise the client that it is company policy to make no progress reports until the contingency period is over. D. Avoid speculative statements in all reports. 9.28 How does sharing the qualifying function with a lender protect a licensee? A. It guarantees that a buyer will have a loan. B. It reduces the chance of presenting an offer from an unqualified buyer. C. It relieves the licensee of his or her due diligence responsibilities. D. It allows the licensee to avoid asking embarrassing questions. 9.29 The area of agent activity where there is the greatest risk of failing to maintain client confidentiality is A. Trust fund handling. B. Office management. C. The agency relationship. D. The closing process. 9.30 The area of agent activity where there is the greatest risk of creating a false impression that the licensee is a certified appraiser is A. Performing a comparative market analysis. B. Writing property advertisements. C. Presenting written offers. D. Researching ownership documents. 9.31 One of the major risk areas in advertising a listed property is that an advertisement will A. Describe the property in excessively glowing terms. B. Fail to appear at the same time in all available media. C. Omit any mention of the owner's main selling points. D. Make a substantial misrepresentation. 9.32 Property managers have a _______ relationship with the property owner. A. Non-binding. B. Partnership. C. Fiduciary. D. Subajenki. 9.33 One of the property manager's fundamental responsibilities is A. Obtaining construction loans for the principal. B. Financial reporting to the principal. C. Finding a buyer for the property. D. Maintaining good standing in a manager's professional association. 9.34 Effective gross income is defined as A. The total of scheduled rents. B. The total of all rents and revenues generated by a property. C. Potential gross income minus debt service and reserves. D. Revenue from all sources minus losses from uncollected rents, vacancies, and evictions. 9.35 The efficiency of marketing activities can be measured in terms of A. Cost per tenant prospect generated per lease. B. Number of ads produced per marketing dollar. C. Dollars expended per square foot of vacant space. D. Percentage of reserves expended on marketing. 9.36 If a property's vacancy rate is significantly lower than market rates, it may be a sign that the manager needs to A. Lower rental rates. B. Raise rental rates. C. Find better tenants. D. Improve management quality. 9.37 What are the three kinds of maintenance a manager has to carry out for a managed property? A. Constructive, deconstructive, and reconstructive. B. Routine, preventive, and corrective. C. Scheduled, planned, and improvised. D. Emergency, elective, and optional. 9.38 The Americans with Disabilities Act requires property managers to A. Ensure that disabled employees have the same level of access to facilities that all employees have. B. Hire the disabled whenever possible. C. Remove all existing barriers to the free movement of disabled persons within the property, regardless of the cost. D. Remodel the ground floor of the property in accordance with ADA standards if it was built before 1978. 9.39 Commercial fire and hazard insurance policies usually require coverage to equal at least 80% of the property's A. Replacement value. B. Reproduction value. C. Original cost. D. Depreciated basis. 9.40 Trust funds to be handled by a property manager are likely to include all of the following except A. Rents collected from tenants. B. Cash for the management firm's operating expenses. C. Security deposits. D. Capital contributions from the property owner. 9.41 What kind of agency is commonly created by a management agreement? A. Universal. B. Specific. C. General. D. Vicarious. 9.42 Which of the following describes a gross lease? A. The tenant pays a base rent plus some or all of the operating expenses. B. The tenant pays a fixed rent, and the landlord pays all operating expenses. C. The tenant pays a base rent plus an amount based on income generated in the leased space. D. The tenant pays a rent that increases at specified times over the lease term. 9.43 If an apartment contains a refrigerator that is not included in the lease, A. The lessee is required to buy it from the landlord. B. The landlord is required to remove it. C. The lease is invalidated because of an incomplete property description. D. The property manager does not have to maintain it. 9.44 A basic responsibility of a landlord is to A. Provide leased space at market rental rates. B. Deliver a habitable property. C. Keep the rental space freshly painted. D. Refrain from entering the leased space at any time during the lease term. 9.45 How does a constructive eviction occur? A landlord obtains a court order to force the tenant to vacate the leased premises. B. A court officer forcibly removes the tenant from the premises. C. A tenant declares a landlord in default and vacates the leased premises. D. A landlord declares a tenant in default and takes possession of the leased premises. 9.46 Among the essential elements of a management plan is consideration of A. The competitive market for the property. B. The property manager's career goals. C. The property owner's net worth. D. The management firm's income goals. Test 10, Real Estate